One, two, three. Okay, guys. So it's a new day. Yesterday, I had before meetings with clients from the U.S., but it was in a different. It was more on the asset management business back in the days. But now I had the opportunity for the first time. Thank you for my publisher for the opportunity to talk. It was 50 people live, like with Tilson, Porter Stansberry. So that's actually pretty cool. Just following my colleague Steve Place, he does his own presentations. So thank you all to the team, my publisher, Global Profits LLC. So what's happening? In half an hour, we're going to have the release of the most important data, macroeconomic data worldwide. Nothing else matters. Nothing else matters. CPI, Consumer Price Index, inflation figures year over year. Now, I'm going to make this very simple in this video, and I'm just going to show you what's happening with the S&P. And again, I think probably this is the third video that I do in this matter. Check out the trend line. The only trend line that you need to understand how to use, and you will be profitable in 2022, 2023, and 4. Why? Take a look at this. Here we go. So, where are we? This is all that matters right now. As far as trading view, go to SP500 USD and pick the data from Wanda. That's what I'm using. There are multiple sources of data. This is the one I'm using. And what you have to pay attention, and I explained this before, and if you're new to the channel, let me share this with you. Basically, we are coming from a trend line all the way from the bottom of the great financial crisis, 2008, 2009, all the way to this top back in February, sometime February 2015. And then once again, another top in January of 2018. That's right there, okay? So that's the top right there. Then this particular trend line, it's one of the most accurate trend lines you will ever pick in any YouTube channel or from any analysts, okay? So we'll make this very simple. It picks the top January and February of 2020. We know what happened there. We have our third market crash in 20 years. And there you go. And predicts with the best. It's super accurate. We have 3 decision-making points, 3 decision-making points that allow you to know once we have the breakout of this level, we shouldn't be surprised with this massive move to the upside. Where's the price right now? I'm looking at the monthly, and forgive me because I actually failed the drawing class in school, but these are my ugly lines. I know it's ugly, but it's just ugly lines, and so far so good. If we have a close for the month of September 2022 above this trend line, we're in the money. This is why I have chosen to use the color green, not the color red, which people will say this is a bearish trend line, but actually this is a bullish trend line from the last leg from the great financial crisis. Now, if you look at the weekly, now see what's happening here. For whatever reason, my configuration on my trading view, looks red, but it's actually last week was 3.41% for the markets. Now, look at what it's doing right now. You want this to close and break above this level. If we finally have this close and above this liquidity level right there between 4,330 and 4,289 in the S&P 500, that will be a consequence of 2 circumstances. Number 1, CPI flat, lower, miracle. If we actually get very close to 7, that would be a miracle. Okay, a lot of people say, well, prices of gasoline, they have been on the downtrend for the last 92 days. There's a little bit of that. So that's a perspective. If we look into the next factor, it's a given. The Federal Reserve will hike 75 basis points. It has to happen. They're not going to miss that opportunity. But what is important, like any earnings report, the FOMC minutes, that's where you look in the wording. What kind of wording he uses? Because if Jerome comes out of the gate swing for the fences, then we have an issue. But if it doesn't come with like that, because one of the previous rallies, he was very passive, very kind of eloquent, understanding what was happening in the US, right? So that might happen again. If his wording, if the way he projects, tonality of the speech of the Federal Reserve minute, it's sort of kind of pausing, not pivot, pausing, then you have the great miracle. Closing, and all these levels to the upside will be filled. All that liquidity all the way to 4,630 points. I'm going to just put this on the table. That will be my upside target, 4,630 points, okay? This is the miracle, end of the year 2022 miracle, and it will open all doors, both doors, to have a 2023 where we might actually have a new all-time high and close to 18 to 25% returns in the US stock market, believe it or not. And I think like what happened with a lot of companies, a lot of analysis, and this is the only thing that I actually so far I have found to be accurate coming from Jim Cramer, is the fact that people think that we're 1999. The Apple, the Microsoft, those companies are not the same companies. So that's just to give you a little bit of that. And the consumers are also different. They're not as broke as they were during the dot-com bubble. That's not true. Yeah, there's a lot of credit card usage and sort of that, but if you look at delinquencies, they're not that high. They might be a little bit higher than what they were 2 years ago, but they're not at the levels of the dot-com bubble, nor the levels of the great financial crisis. So that's something that you definitely need to consider when you're looking at potential opportunities. Now, this is the look. This is where I want you to pay attention. Of course, everyone we're talking, I mean, most YouTubers, most analysts at some point, excluding the ones at CNBC, they probably kind of missed the golden pocket. This holding, the holding of the 61.8% Fibonacci retracement, but that's there. So if you're looking above the zero, what happened? And can I just move everything here just to finish today's video? I'll probably come back with another video. Let's just for a second remove everything. Take a look at this. One, this is two actually, because this is the fake out. Two, and you have that perfect 61 right there. Yeah, 61.8% Fibonacci retracement. Now, but what I like to have is measuring the whole thing. That's 657 points from the bottom to the top, okay? And now the magic begins. So we have the projection. This is a projection, not a prediction. You project from the point where prices stopped going lower and they reversed. So that's from the 61, and you take the conservative projection is 657 points. And that takes you to 4,538 points in the SP 500. Is that something crazy? Of course not crazy. We were here before in sometime in August and then sometime here in April. Now, Helen Meisler, one of the things she says is like, it doesn't matter what you're doing. Thank you for playing, because we will probably be back to the levels we were at the beginning of the year. And if you were just going to the levels that we actually traded at the beginning of the year, that means that the S&P has going nowhere in 2022, which is not that bad when it actually was down almost 23%. So that's a fine lecture of what's happening. But once we are here, there's another surprise. One last surprise for everyone today. We're not only above from the point 0.1 to 0.2 above the 200 exponential moving average. If you look at the daily, then we will be way higher right there. We'll be moving away from the 200 exponential moving average on the daily chart. Then we are going to move around 8% from that point. And guess what's going to happen for a lot of CTAs? I think that stands for Commodity Trading Advisors. They ought to be long. They're going to go long. They're going to go long. And a lot of people that have massive bearish positions are going to get burned in this scenario. Now, simple answer to the whole picture. What happens? How do I know things are going to get bad? Well, you know, things are going to break if we actually have, let me switch this to red, light red. Things will get bad if we actually have a breakout of this level. The key level is 3,890 points. I repeat, 3,890 points. We might have a push, probably pick some liquidity. That will be spectacular if it happens. And if it goes back, it's all good. But definitely, this is your invalidation process. Anything under this level, it calls for an emergency, calls for you to tie your stop losses, and make sure you pick as many profits, take everything off the table. If you have green, take the green and protect yourself. And at this point, we'll be looking to reverse our criteria and look for put options. In my case, I trade options at the Market Surveillance Alliance, and that's what we'll do. And of course, I wouldn't be surprised if that were to happen. I would just go flat, close all positions, and start picking those companies that will be the easiest targets to short in the event that we actually go all the way down the hill. Okay, so guys, thank you for watching, and remember, never forget, someone always, there you go, you got it, someone always knows.